a quick look of the overnight pre-market Globex activity in the SPOOs, the ES. Um, Looks like we not a lot of movement at all. So pretty relatively tight range. The range that you're seeing right in here between 53.14 and 53.24 is the bottom part of the range at the end of the day where we broke down a little bit. 24.25 was a potential long area back into 33 VPOC. Um, that was the possibility for a trade toward the end of the day. Eventually, it did break down after market, and now we're just at a tight range. So yesterday, our discussion was after the Wednesday big move here. See, I'm just trying to see where my there we go. Yeah, I'm trying to make so this move over on the left side, we had discussed pre-market. What was the expectation for the day? And the expectation was for us to somehow be able to kind of just trade in this range here and fill the volume. That was the expectation after two big days. Typically, you're going to have consolidation. It didn't quite do that. It did, but it always comes with, if this, then that. If we trade above that 37 area, we knew there was a possibility up into the 53.50 gamma area, the round number gamma area. We knew that was in fact a possibility. That's exactly what it did. Basically traded up to right at 48.75, where there was an opportunity for a short, and then traded back down toward VPOC. I did point out in the morning that I thought that there was a high probability that we revisit VPOCs in both indices, and that's where I picked up some SPX 43. 53.15 puts. It took them a while. It took them a while to work, and I got my scales and I reduced my bases to zero. And then I really was just getting tired of looking at paint on the wall instead of just being patient and step back and let it evolve, because I really thought there was a solid chance of tagging 53 even in SPX, and as well as closing the gap. So I thought there was a high probability of that. That's an area where I'm just going to have to refine my own discipline. Perhaps keep a quarter unit. Already had them for free, and keep them for like a market on close situation, because that's basically what happened when it all triggered and we had a nice little sell off there. And those went from I paid $3, had a basis of zero, and then sold three quarters at 4.5, and I actually did keep a two lot on. And I had, if you see, there were four contracts that traded at 15, two at 15 and two at 15.11. The two at 15 were mine, the two lots. So I was fortunate just to keep a couple small ones on. I didn't say it. Sometimes when you just have something lingering, you're just not certain it's going to pan out, you leave it on and you just shut your mouth. So there's, that's just not much you can do about that. So I'm going to shift over to SPX here, our underlying indices, which this is where all the magic happens. So let's see, let me get that. Yeah, so now I can see where we're at. So ES is trading up 4 points. So we had a close in the SPX right at 52.97. Add 4, that puts SPX right at the 53.01 area. So basically right in here, which is right in there. Now what I think, so that would relatively mean that there's like a 4-point gap if we were to open today. That will be a simple gap that will be filled. At what point, who knows? Because if we trade above this 53.01 area, there's a high likelihood that we trade back up to the 53.09, 53.10 area. The spread was trending right at about 23 yesterday. So that basically would put it at the 53.10, add 23, 53.33 in the ES. And that's where resistance was yesterday. So if and only if trading above 53.10 or 53.33 in the ES, then we'd have the chance of getting up to the 53.23, which would be ES 53.45.47. So if we trade above that area, there's a chance of retesting yesterday's highs. So that was the thing. Try to avoid trading the breakout. If it moves, let it retrace and let the service support. And then there's an opportunity to participate in the long to retest yesterday's highs. Now, if we get down below this, the VPOC area and then close yesterday at 52.97, right in here. I'm now going to bring this in. Let's see, get that.
What did the spread close at yesterday?
Right at 22.75, 23. And you could see it's up 3. So right now it'd be at 23.25. So that's about right. We trade below this area. Now we have the chance to get back into what Dan and I were, and Lee and I were talking about yesterday. Off of this massive move from Wednesday, we left this huge gap down here. And, you know, it's going to be an opportunity to fill in auction and fill in this area here. So there's an equally strong chance of us trending down and filling out this area, or above 33, we retest the highs yesterday, above that. And if it wants to take it higher, it's going to take it higher. So try to think about this in terms of level to level. We have no control of what it's going to do. You play resistance, you get short resistance level until it doesn't work. If it breaks out, goes through, comes back, let that previous resistance serve as new support, and just participate in what the market's doing. Don't try to overcalculate it. With that, I'm going to hand it over to Dan. I think we like to keep simple approaches. That's about as simple as I can provide it to you. Dan, I will yield to you and turn my screen off here.
So just to pick up on where David left off there, this was that box that I drew yesterday morning of sort of the area that needed to be auctioned. Still here, and we're sort of treading right on top of it. And David said the spread's 22.75 or 23. So at 53.23, we are at 5,300 on the SPX currently. So if we, like David said, can get below this volume point of control here with overnight, which was 53.19, and yesterday's volume point of control was all the way up at 33. I think we can come down into this area, into this purple box, and start auctioning this area and filling in sort of this. I think 2 days ago we were looking at this as a sort of a triple distribution, and which are normally good setups for us. And I think this area here are two areas that really need to be filled in, which is 53.13 down to 52.99, and then above that we're looking at sort of 53 right here, essentially down to 14. So sort of the overnight lows, the exact overnight lows, which was what, 53.13. So that's the area and that's the area I would expect us to sort of live this morning. If we do, in fact, get back over SPX 5300, that changes things a little bit. It's not my expectation, but we'll prepare for it. If that does happen, that's less of an area of trading interest for me, and I will get pretty disinterested pretty fast. Unless we sort of see a crazy type squeeze move setting up. I don't envision that happening, and I'll show you why. First off, we have, let me see if I can get it up here. UB overnight, we've damn near retraced it. This was the CPI move, or CPI, right? Yep, because PPI was Tuesday. So this is the CPI move here. We immediately dropped down to 23.12. And then immediately ripped up to 125.09. We've now retraced almost that entirety of that move. And Bateman was just asking me about longing it. And I said I did not want to long it just because this 50, 1, 24, 6, 17, 18 was such a big level that I just, if we can get below this, I think we have to go and fill down in here. So that's one of the big reasons I'm not expecting the bonds are not going to be a tailwind for equities today. Bonds right now are a headwind. So UB's been a good trade for us of late. So I'm going to be watching UB pretty carefully because there may be a trade in there somewhere. If, for example, we break down in here, come back, retest, there might be a short to be had. We'll have to see how it goes. But I look at that as a pretty big headwind for today. With UB comes RTY. RTY is also, I mean, it's essentially flat, but this morning's move, let's see if I can, there we go. So this morning's move, we had, this is overnight here, some from Globex start. We've sort of gotten that little bit of a sell-off down into this area. I think we need to come and test this 2096 area and get down into here where there, you see this sort of volume ledge. This is the CPI move. We have now retraced all of it. So we are actually retesting that high right now from prior to CPI. We've retested that. And the index that really hasn't retested that is here. So CPI is here. This was the move from Wednesday. ES is here. Do we come and retest this CPI candle area down here? And pretty critical area to hold for a continued uptrend market. If we fail this low end, which is 52.94.95, I think we could see down to 75. I think, and we could see that pretty fast. So that's a big area that I would mark on your charts. Write a note to yourself here. If we lose this 52.95, and there's a lot of support in this area. So is this an area that I'm going to probably try along? Yeah, it is. But it's if we lose this area, there's a lot of empty space right here from that CPI move. And we have RTY retracing, and we have UB retracing that move. We have gold absolutely going ham right now. Bonds falling apart a little bit relative. So my inclination today would be looking down, but that changes if we can get above SPX 5300 and maintain above it. So,
hey Dan, that area you're talking about, that ends up being a gap. So there's a gap in SPX from 5248 to 5264. So that would equate to the 71, 73 up to the 87 area on ES.
So that would have been Wednesday, right? So right here.
Yep, that area you're pointing to. Yep. So that's an area that everybody should be aware of, that gap.
So that's CPI day right there.
Yep.
So we're seeing some stuff retrace back there. ES and NQ and NDX haven't gotten there yet. But bonds are a big headwind today. And TLT, I'm looking at that 91.64. It closed yesterday at over 92. So it's not a huge move, but so I could anticipate seeing a little bit more of a bond move. Bonds sort of tend to not go much bigger of a move than around 1.5%. So we're not quite there yet. So there's actually some room sort of down on bonds. It's not a scientific method by any means, but it's more of an observation. They tend to not um, really have much bigger moves than that. And we're seeing Apple start to sell off here a little bit. Apple, let me pull that chart up. And why I was looking at that, let's see, the volume profile comes up here. So you've got the volume point of control 1, 2, 3 days at 190. We break below this 189, like 45. You get into a volume gap down to like 180, low 188s, 187.50. And the options volume is insane in terms of 180 calls, 185 calls, 187.50 calls, even 190 and 192 calls are all expiring today. It's just an absurd amount of options volume expiring today. So the technical setup is a decent one for down here. I like this setup. I've been long Apple on 180 calls since their earnings. But I think that this is a perfect setup here for a nice retrace down, which could lead the indexes down to retrace back to that CPI high. So turn it over to you, Lee.
Thank you. Get my screen. And there we go. Okay, I'll try not to be too repetitive, and Dan and David gave you their levels. I'll try and stick to some alternative levels just to keep an eye on. Obviously, 3250. Going back to this larger pattern, is the closest immediate resistance that I have in the Fibonacci world. And then, obviously from the 15,000 foot view, way down here at 5290, 50 would be supportive. So those are the two sort of levels that I would keep on your radar today. And then I'll flip back over to this view. So back here again, we have this 5232.50, which would be right around here. But right below that, we have some other key levels. This I've talked about the last 2 days. This is a weekly pivot at 30, and this is a daily mid pivot at 28.25. So this entire area here is pretty hard resistance. So that's going to be the key for me to watch if we do push up, getting over, this kind of area here and this. So, and then of course we have another pivot up here, and then we're dealing with yesterday's highs. And like Dan said, that's really what we're looking for, is a break of that to be sort of confident of any long side, or at least sustainable long side. And then below, obviously we're going to be opening up right around that 5300 SPX, which they talked about. So getting away from that on the downside is going to be key. And then I'll just be sort of playing it level to level. This is the next major pivot level down here on the weekly, 5288, which kind of corresponds with this back here, this 5290.50. So there's a couple of decent levels right around there. Below that, then we're probably looking at getting into that, close to that gap fill territory that they were talking about. So that's what I'm watching on indexes. I shared this chart last night with Tesla. This is an interesting setup here, more of a long swing. This is a daily inverted head and shoulders setting up. We do have a Fibonacci support here at like the 171.50 area. So you can look at that as a sort of line in the sand that you want to stay above. So it's a pretty low risk reward. The way Tesla's been acting, it's probably a difficult options play because it could chop around a little bit. So if you're going to do it, buy time. Equity is probably a little safer, and don't be afraid of getting equity because it's $170. Your risk is only about $5. So if you took 100 shares, you've got a $500 risk, and the measured move roughly would be 40-ish points, which takes you to around 220, and you have a 61.8 here at 218.37. So that could be sort of the long-term target on this setup, and then a failure would be below this 171.50. If it did drop below there, it still could work. It just means it's going to chop around a little more. So, but it's not. It's a decent looking setup. It's kind of been building up for since the beginning of March. So don't expect something to work out today or even next week. It could take a few weeks. So if you're going to do it by time, if you're going to do options, probably a spread is better than just buying calls, which will help the theta aspect. And I would probably do 60 days out. Let's see. I know you're talking about Apple. It's kind of at a decent support here at 189.59 on the Fibonacci world. If it drops below that, that's where I think the downside can really kick in, down to this 187 area. So I'd be watching that.
Nvidia is interesting. If it gets below 940, it gets into a pretty big volume gap down to sort of 900, 912 was that breakout area that we looked at before.
Yeah, I was looking at that this morning also. I've had these levels, they've kind of played out over the last, we were looking at it down here for the long, which I took. I'm out of it now. But yeah, this you said 940, 938, 83
Yeah,
is the level here.
roughly. Yep.
Yeah, that's definitely a line in the sun. I do like this setup long if we can get over this 949 area, 950, to kind of try and get up to this 963 and 974 would be all-time high. I like the way it's curving here.
I'm on the other side of the ship where I would love to see this come back and test that 910, 912 and long it from there.
Yeah, and there's a possibility there is a start of what could be a harmonic here. This could kind of come up to around an 88 and then come back down and test these lower levels again, and then create another long setup around here. So that's a possibility, or it could just keep pushing up above here and be more. This could also be an
Frankie's asking about AMD, which probably, I mean, that's been actually relatively strong versus the sector.
Yeah, I think Jim had a swing in this, Jim B, and I liked it.
He did, and I joined him, so it's been a decent little ride. We have the June. What do we have? Jeez, June 175. Does that sound right?
Yeah, and I actually hold on 1 second. Let me get rid of this. I'm on the wrong time frame here.
And we sold them for double and triple yesterday, and still have quarter position.
Yeah, so it's had this nice, again, another harmonic looking setup that I had it here to here to here. So it's definitely still got room on the upside. I did not take it. I had it on my radar and I just was managing other stuff, but definitely a nice trade. Back to NVIDIA. There we go. So yeah, that's kind of the two setups potentially. Is you've got this ABCD formation that could take us up to these all-time highs, or if we get a failure sort of in this zone here, then we'll be looking for a long more. You could short this, of course. Go back to old-fashioned trend lines. Just boom, right here. So if you
just a decent rejection off of that 24.25 on ES just now, and now you're seeing sort of Apple start to get a little momo to the downside under 189.50. So as we're speaking, we're seeing a little bit of a downturn here, which is nice to see for my Apple puts.
So folks, we're talking about two correlations that if you're trading SPY options on the downside or ES on the short side, it's like, sure, I'm NDX, I'm watching that, but now I'm fine tuning my vision to paying attention to Apple and NVIDIA, because NVIDIA has been the leader on the tech side, and that could help pull the NDX down, as well as Apple participating to the downside. So there's two tells there.
Here's the other
Yeah,
thing.
and a tell that. So for a very long time, when with trading with Gov, we used the Russell as one of probably our biggest tell, right, David, and it hasn't worked like that of late, but today you've got the Russell pretty weak, bonds pretty weak, so all the signs are there that we're probably going to have a bit of a retracement from this CPI move, and I would, my guess would be we need to go visit the scene of the crime where that breakout started.
Just real quick on AMD too. It is tapping this 50-day moving average here at 168.75. So it rejected there yesterday. If it can get over that, then 174.18 would be the next logical target. So if you're in that, that's what I'd be watching. And I think Baba was the only one I was watching. I kind of missed this entry. I mean, this was beautiful when it held this.
I was looking at this one at 73, and I was like, I should add this to my long term, but my hatred of China stocks kicked in.
Your xenophobia kicked in, right?
Well, I mean, I have been burned so many times by trying to buy a China breakout that I mean, I have PTSD.
This was
I share that PTSD.
This here is just, go long. This rejection lower than the 200-day, and even taking a position the next day. I mean, this was just a beautiful move. It's a chase here. It could rocket higher up to $100. I think it probably will, but I don't like chasing. So, even zooming in.
It is a great setup, and Crander nailed it yesterday. It's a great setup.
Yeah. So,
all right, gents, we got 2 minutes to the open.
All right. Well, thanks everybody. We'll be in the room, and anybody watching on Twitter, click on the link in our bio and come join 2 weeks for free. We do have
see you guys.
10 viewers on X right now. Woohoo!
Awesome.
Good luck, everybody.
All right.
See ya.
Thanks.
Bye.